Hi guys, so here Rory here, co-founder of Sublime Trading, here with the daily update for the UK news indices for Wednesday the 24th of June. Okay guys, hope you're well. So yesterday was a very good example of why you do not want to get caught up in intraday activity. Starting with the US market, what we saw was a gap up at the start of play. We then saw further bullishness throughout the day, and then at the end of the day, towards the end of the day rather, we saw the bears come in and start pushing price back down. Overall, price is still very much bullish, as the trend has been bullish since March, but not every candlestick is going to fire up in a bullish direction day in, day out. There's going to be periods where there's pullbacks, and there are going to be periods of consolidation within the trend. So currently, what we're seeing is price stuck in an area of consolidation between the high and the low of June. Now, as long as price remains within this area of consolidation, we're going to see movements up, we're going to see movements down. Now, this is for the S&P 500 and the Dow Jones particularly. The Nasdaq, of course, is creating new all-time highs. It's gapped up, but even then, even with new all-time highs, we can't expect every price to just be a bullish bar. Every bar to just be a bullish bar. There are going to be days like yesterday where there was bullishness, and then intraday activity caused a reversal in price, and this is where a lot of people end up losing a lot of money. You must always focus on the long-term trend. The trend is your friend until the bend at the end, and yesterday is not a bend, it was just a intraday activity. Overall, we're still very much bullish, and that's the direction that you want to be going in. Moving across to the Footsie 100, again, price is still very much in an area of consolidation, still trading inside the range of the high and the low of June. We also want to see a breakout. We saw a bit of bullishness yesterday, today bearishness. Ultimately, price is in a range. So our stance overall has not changed. We are still bullish, our bias is still bullish, we're still holding bullish stocks, we're still looking to enter long positions on breakouts, because remember, the indices are an average. So even though the indices may be in this area of consolidation, there will be stocks that are pushing on to new all-time highs and breaking out from consolidation. So you want to always be focusing on the stocks and not the indices. Use the indices to give you a guidance in overall market conditions, but always then narrow down to the best performing stocks to actually enter into your portfolio. And this is where scanning comes in and understanding how exactly to pick out the best performing assets. So for now, guys, the indices still range bound, still waiting for breakouts, but overall we are still bullish, and we will continue to have that bias until price dictates otherwise. So let's get into the charts and catch up with price action.
So guys, if you're new to these daily updates, then I recommend starting with the recording that's pinned to the top of our Facebook page, so that you get a good understanding of what I go through in these charts. So this is our 3-screen setup: monthly in the top left, weekly in the top right, and our daily chart down here across the bottom. The first chart we will look at is the monthly time frame of the S&P 500. If we look at the month of June, we can see it's looking like an indecision candle, with price struggling to break through the high of last year. If we move across to the weekly time frame, price above the 200 and the 50 simple moving averages. We can see this week so far is a bearish week. It was looking bullish, now it's bearish. Overall, though, price is inside this area of consolidation. We can see that in more detail on the daily time frame. Price above the 200 moving average. A bearish day today. Overall, though, price inside this area of consolidation. So we are seeing bearishness today, but we still need to see how the day ends. This could look very different, but the bigger picture is that price is inside an area of consolidation. So we don't need to get caught up with a single bearish day like this. Price will move up and down, it whips up and down while price is inside an area of consolidation. This is where patience comes in, and where we really want to see a breakout. And as the overall trend is bullish, we want to see a breakout to the upside and a breakout above the high of June to suggest a continuation. We'll have a similar setup on the Nasdaq. The only difference is that the Nasdaq is already pushing to new all-time highs. It's trading around that 10,000 round number. On the weekly time frame, price above the 200 and the 50 simple moving average. This week again was a bullish looking week. The bears have come in and started pushing price down. Remember, it's only Wednesday, so by the end of the week this could look very different. And if we look at the daily time frame, price above all 3 moving averages, the overall trend is very much bullish. We are seeing a bearish day today, but again, price is probably likely to come back to this previous all-time high. This will act as an area of support, and then we could see a move back to the upside. For now, we just need to hold tight and apply patience. On the Dow Jones, which is very much lagging behind, we can see that the month of June again is looking like an indecision candle. It is trading below the high of last year, which is acting as resistance. On the weekly, price above the 200 but struggling to break through the 50 simple moving average. And on the daily time frame, you can see prices inside the area of consolidation, just like the S&P 500, but it's below the 200 simple moving average. Our stance is no different here. The overall trend is bullish. What we want to see is a breakout, and ideally a breakout to the upside. The Dow Jones is lagging behind the S&P 500 and the Nasdaq, so the fact that it's below the 200 moving average is not surprising. We just need to apply patience here and wait for a breakout, and ideally a breakout to the upside. Moving to the S&P 500 mini, well, price was indicating a bearish day, and we have seen that at the open of today and further weakness throughout today. But remember, again, it's the end of day candlestick that we want to focus on. Moving to the Footsie 100, similar sort of setup. We can see June is looking like an indecision candlestick so far, with price finding resistance. Again, this could look very different by the end of the month. On the weekly, price is below the 200 and the 50 simple moving averages. Price inside an area of consolidation, a bearish week so far this week. And on the daily time frame, we can see that price is below the 200, below the 20 now, with price action today taking price below the 20, but above the 50 simple moving average and that 6,000 round number. As long as this area holds strong as support, we just need to apply patience. What we're looking for now is a move back to the upside. Still waiting for price to break and close above the high of June and the 200 simple moving average to suggest a continuation towards those current all-time highs. So patience needed. Let's see how today plays out. If it is a bearish day, well, price is still inside an area of consolidation. All we want to see is price finds an area of support and a bounce back to the upside. So let's see how price action plays out today and what we could see through the rest of the week. Okay guys, that's me for today. Please like, comment and share. Let's get people understanding how to use the indices correctly to build a solid investment portfolio. And I will be back tomorrow with the next daily update.